Lokapriya now. He's joining us on the phone line. Chakri, what do you make of the markets, the sort of recovery that you are seeing? How should one look at the markets right now? Should one look at it that the crude is below $50 a barrel as a positive, or global risk appetite is falling day by day?
Yeah, if you look at the market, we are today where we were in 2013 and 2008, and a few more instances in the past when the crude was extremely volatile. For in 2013, the crude was extremely volatile, as it is now, and so was it in 2008. And each of the subsequent following years, 2009 and 2014, were positive years for Indian corporates once the commodity prices had stabilized. And, mind you, in 2018, so far, just in October, crude is down about 35-40%. And and now the current consensus forecast for 2019 is about $65, which is a good place for Indian companies, and therefore good for Indian stock markets.
Hi, good afternoon. This is Nayantara joining in from New Delhi. Chakri, if you look at the global markets, it's been the worst day for worst Christmas Eve ever for Wall Street. You're having all this chatter that how Donald Trump wants to get rid of the Fed chairperson, saying rates are going up too fast. It's the only problem in the U.S. economy at the moment. So you've got that volatility coming in. You've got volatility in the Indian markets with respect to the elections in 2019. You've got commodity markets selling off. So going into the new year, would you say today maybe is just an aberration, or is this trend likely to continue till we don't have some certainty? And it's unlikely we're going to have that certainty anytime in the near future.
Indeed, Nayantara, I think they're all extremely good points. I think subsequent to Trump, I think on Christmas Day, he's come out with something positive, or rather, he's kind of indicated his support to the Fed. So that notwithstanding, I think those will be tea leaves which are very, very difficult to read. If you have looked at, the most recent Indian elections, NDA had lost in all 5 states, and despite that, the markets moved up. And so I think clearly the market is telling us that political uncertainty is going to be less of an issue. The major reforms like GST have been successfully implemented, yes, with a few hiccups, but largely successful. Markets have largely been very subdued. Even if you look at Nifty, it's only a handful of stocks which are actually positive. If you look at real estate, media, auto, metals, these are all in the Nifty down anywhere between 25 to 30%. So this is not clearly an overheated market, so which bodes well for 2019.
So Chakri, what would be the big, trend going into this year of uncertainty globally as well as in India? Yes, we've had some great economic things to celebrate, whether it's a GST, insolvency bankruptcy code, expectations of 1 lakh crore rupee to be raised in the new year. You've also not deviated from the path of fiscal consolidation. The government still hasn't done that despite the drubbing in the recent 3-state elections. So from the macro fund, it's all looking good, even when you look at crude oil prices. But, what do you expect, like maybe just the blue chip counters, because these sell-offs are also providing opportunities over there? Or would you see participation from the broader markets as well?
First up, as you rightly pointed out, while GST, the targets have been slightly lower than expected, I think there is a growing realization, a continuous refinement of the whole process, and a lower tax rate in some of the recently announced products would lift demand and therefore revenue, and it would kind of, make up, because the government does indeed seem confident of meeting its fiscal deficit targets. So against that backdrop, I think the deficit worry for the markets is kind of okay. The market's not really worried about it. Now, if you look at, forget about broader markets, even within the Nifty, auto stocks, frontline auto stocks are all down 20-25%. Frontline metal stocks are down about 20%, and media. So, except for maybe IT, FMCG and the private banks, everything else is negative return, negative minus 20%, which classifies as a bear market. But the fundamentals are clearly improving than they were in 2013. And 2014, mind you, was a good year. Therefore, we expect 2019 to be a year of recovery.
Right, but how would you position yourself? Which sector stocks would you like to be with, and large cap, mid cap, how would you classify?
I think we would position ourselves where the earnings recovery is visible, whether it's large cap or mid cap. Where I think we will go ahead with a multi-cap approach where the earnings visibility in individual stocks is the highest.
Right, Chakri. Thank you so much for taking out time for us. Always good to get perspective from you. On that note, we